Hi, I'm John Persinos, Editorial Director of Investing Daily. Welcome to my latest video presentation. With me today is my special guest, Sean Levine. Sean Levine is a registered representative at DealMaker Securities, which helps fledgling companies that want to raise their own capital. Sean has experience as an investment banker, attorney, securities analyst, entrepreneur, and consultant with a focus on private placements, fundamental and technical equity and commodity analysis, trading system development, and policy intelligence. Sean, thanks for taking time out from your busy schedule to join us here today.
Pleasure to be here, John. I probably ought to start with, we have a disclaimer because of my positioning with a broker-dealer. Everybody should understand these are my views, not views of my current or past employers. This isn't legal advice, and we don't recommend any specific issuers. You shouldn't act on information from this discussion without seeking professional advice from trusted advisors, and these opinions represent my views only.
Got it. Understood. Explain Regulation A, so-called Reg A, to us. How does it work, and what are the advantages for a company of going the Reg A route?
Yeah, so somewhat popular name for a Reg, people call it a mini-IPO. And in some ways, that's a fair description. Companies can raise up to 75 million in securities, as opposed to an IPO where it's whatever they can achieve, assuming they follow rules of Reg A. So $75 million cap, and again, they can do it a lot more economically than they could under an IPO. So an IPO, if you compare it to, might cost an issuer $1 or $2 million to get all the way through the process off the ground, and also very time consuming. A Reg A issuer can often get by spending, say, between maybe 150 to 400,000. So certainly not cheap by any means, but compared to an IPO pricing, it's much more reasonable, and also it's a faster process. And additionally, much like an IPO and unlike traditional private company offerings, a Reg A is open to anyone. There's just a cap on how much less wealthy investors can invest in a given deal. By going to regular or retail investors, the issuers can avoid all those venture capital headaches and remain the captains of their own ship. And it's also, again, a much faster process and a cheaper process than the IPO approach. So it's kind of a nice middle ground. One other really useful benefit for certain issuers, if a company has a product or a service that they already are in the market with and they're trying to sell to consumers, a lot of the success of a Reg A ties to how well it's marketed or advertised. It's very similar to what a company would do if they're trying to promote their product or service. If there's a lot of ad and marketing campaign that ties in, and if you already have a product or service, you're already probably spending to create awareness of that. And so selling stock while you're selling your product and using a Reg A to do that, it can lead to this kind of virtuous circle situation where the product consumers want to own a piece of the upside when your business succeeds because they believe in the product, so they see upside there. And then when you're investors, they want to consume your product because they want to help their investment succeed. So both sides win. It feeds back in. It's this nice, good feedback loop.
Reg A has become an increasingly popular option for small companies that need funding, as you've just explained. But how can individual investors profitably tap this trend?
Sure. So it's a good question. There's a lot of places where you can find these deals. A Reg A issuer is allowed to host and manage their offering on their own website. So not only don't have to use a portal, they can put it wherever. So as many issuers as you have, you can have that many different deal locations, and there's it can be really hard as an investor then to find a perfect fit for you because there's no central repository for these deals. It's not like you just log into your Thinkorswim on TD Ameritrade or and run some filters and voila, you've got everybody captured in this space. It doesn't work like that. They're all over the place, and even if you search for months and we're really looking for a specific thing, the deals are also open for a limited window of time. So you might find the thing after it's already closed. But if you ever do find something that you really like at all. So will say, Reg A issuers do often market their deals on social media platforms and through other forms of advertising, but you're going to see those, but that means that you're solely viewing deals that those specific issuers have paid for advertising space for you to see. So that's, again, it's a smaller slice of the whole universe of opportunities. So this is where, John, is where you come in. This is, or can come in. We believe strongly that financial media outlets or newsletters, subscription services like this can provide real meaningful value add for investors who are looking to get into this early stage space. Because when financial newsletters decide to cover private or early stage deals, you're scouring the market on behalf of the subscribers, and you're out there and you're looking for hidden gems, and you've got better connections than people like me, and they don't. So because these publications are customized, you may be finding fields of interest that are particularly suited to that particular subscriber base that you have and interest that they like, industry, stage of a company, other factors like that.
Well, picking up on the point you just made, among the many industries I cover, one industry I cover particularly closely is marijuana. The cannabis sector is booming around the world. Are Reg A deals increasingly prevalent in the fast-growing cannabis sector? And if so, why?
Yeah, so we have seen a fair number of cannabis-related deals tapping into Reg A, some of them quite successfully, to conduct their capital raises. And this can range, run the gauntlet for THC active product companies, or say touch the leaf, as we would say. Also, industrial hemp. There's a huge opportunity, and America used to grow lots of hemp, and it has industrial applications. So that's back online, and then CBD. Related products, as well as infrastructure, land where it's being grown or facilities where it's being processed, that kind of thing as well. And also a little bit one step removed maybe from cannabis, but we're also seeing psychedelics becoming very popular in the channel as well. But why are they doing it? They're doing it for the same reason that other companies we talked about a minute ago that have consumer products or something that they're in the market with already do it. It's to create awareness of their company and their product, to engage with everyday investors and gain exposure, and also doing it in a way that lets them keep control over their company and retain the management team's vision in the process.
Well, Sean, your expertise is impressive. I'm sure we'll speak with you again down the road. Thanks for your time. We really appreciate it.
Happy to be here.
You've just heard Sean Levine explain new ways for companies to raise money. He touched upon the marijuana industry as a prime example. Indeed, the mainstreaming of marijuana is making investors rich in good times or bad. Your portfolio needs exposure to marijuana stocks, but selectivity is key. That's why I urge you to read my new book, The Wide World of Weed and Psychedelics. It's your definitive guide for making money in the thriving cannabis and psychedelics industries. To get your free copy of my book, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for today. Thanks for watching. Stay invested and stay safe.